Jeff, thanks for coming out to the barn. This is the Structural Integrity Podcast, where we just talk about structural things as it relates to business and construction in general. So you're a CIO for Vitae Capital, right?
Right.
Do you want to talk about like kind of what your responsibilities are and what you do?
Yeah, Vitae Capital is a small LP fund in Austin, and it's a partnership between myself and Sandeep Shah. Sandeep started the fund I think he started it around 2018. He's had, been in the investing business since maybe 2011. And then we teamed up last year as the fund has grown and the needs changed and have expanded. And so then I joined Vitae.
Well, let's pretend I'm a novice, which I mostly am a novice when it comes to investment of that nature. Kind of tell me, like not necessarily on an 8th grade level, but kind of give me a big picture. Yeah,
what we're doing on a day-to-day basis is we're looking for projects to invest in, and we're putting in anywhere from $250,000 to maybe $1 million at a time. And then those can be either control investments or they could be non-control investments. And, where a non-control would be like we're not a big player, in the grand scheme of the project. There's a lot of other investors there, or there's a major investor ahead of us that makes decisions. But if we're a control investor, we're generally involved in the decision-making as well, and the programming and planning and all that for a project. So that's what Vitae does in its core. And usually we're working on development projects. So that's going to be anything that we're going to build from the ground up most of the time. Mm-hmm. And then it's all things residential. That's the focus of the funds have been for sale and for rent residential. And it can be anywhere from a high rise in South Florida all the way down to a townhome project that maybe we invest in 6 units, and we're the only investor perhaps. And then recently, I think this was last year, Vitae launched an industrial fund. It's the first for Vitae. And it's a very small fund. It's about $3 million in total. So we're only going to have maybe 3 to 5 projects there. So
how does that work? And it's the same thing. You find industrial buildings, organizations.
Yeah. The focus there is shallow bay industrial. Okay. And
meaning?
So that would be like that can be a lot of different things. But if you've ever heard of Garages of America, it can be like that, where you got, that's a little bit of a specialization. Mm-hmm. They have these units that they sell or rent, and people will put their classic cars in there, or they'll put whatever, a guy man cave, or so there's that. And then there's true industrial uses you have people run their businesses out of, and so that's pretty classical light industrial. And so there's different one. No development in that fund. That's actually existing property that is leased already.
More difficult or easier to invest into those properties?
Yeah, they're simpler for sure than residential. So it's a lot simpler, but there's different challenges. Maybe simpler is not the right word. It's just a different challenge. Mm-hmm. They to build them, not that we're doing that in the fund, but to build them is a lot simpler. It's metal or concrete, right? And you tilt the wall up, and there's no stamping out units, like there is in the apartment business, or it's just a totally different process. Obviously, there's different GCs.
So I'm just kind of curious, if I was investing, what would be the differences of whether I wanted to? Now, so investors can invest into the fund in general, but can they also invest in individual projects? From a novice standpoint.
Yeah. Well, yeah, the idea behind having a fund and managing one, it is advantageous for pretty much everybody involved most of the time. For us, it is because for the investor, they have exposure to lots of projects, not just one or two or three. So if they have $500,000, a lot of times a developer, they might have a minimum of $100,000 or $250,000. So your 500 is going to be, maybe 4 deals, right? So you'll have a little bit of diversification, but not a lot. And so, you come into a fund, there's lots of them. Vitae is one of them, right? But they, that gives you a lot more. It's like a mutual fund, in terms of the spreading out the risk. So I think that's why a lot of people like it. And obviously we're kind of unique because we're doing that in development and residential real estate. And so, the other advantage to the investor is that if they go direct to the developer kind of has a little bit of a conflict of interest, right? They're not looking out necessarily for the investor's interest. They're supposed to. And to stay alive in the business, you have to. But so they're not going to do anything bad, or they're not going to. You have to disclose the risks, but do people always read those things? Not necessarily. They read lengthy and fine print disclosure statements. It's hard to do that. So the idea with us, at least, is that we're going to be able to do a lot of due diligence, and our investment framework, we're going to be able to run that every time on 30 projects, right? And we're trying to select those in a responsible way. And, we don't just wire the money into the developer's bank account. So there's some advantages for the investor. And then on the other side, for the developers, they get to deal with one guy, if you like, and not 30 guys. So, and it's just easier to have it. Okay, here's what we're doing. We're going to raise the money and then go put it out there. And it's a one-time transaction in that sense, and not trying to raise money for 30 deals one at a time.
Okay, so you, up to this point, you have been, and you are the CEO also of Brain Partners. Why don't you tell me what you provide to your clients and how you bring a value to the table?
Yeah, Brain Partners is a company that I launched in late 2022, early 2023, and I just kind of decided to leave the company I was with, and I just wanted things to be very simple. And there was still is really, but there was a clear problem at the time that people needed help raising money for their projects, and it wasn't available, at least not easily. So our job was and is to procure the capital that they need, and and on the side of that, or attached to that, we provided CFO services or outsourced CIO or accounting or whatever they needed. A lot of times it was controller work or corrective accounting. And so, we did a property management company. Their books were pretty beat up, and they had some problems with reconciling accounts payable and deposits, and it was pretty scary stuff for a property manager, and they had institutional clients. So we had to get in there and kind of quickly figure out what the problems were, and then get them back up to snuff. So we did stuff like that, and what's happening now is Brain Partners is merging with Vitae Capital, and we're forming a company called VCBP. Vitae Capital, Brain Partners, and that's going to offer the same things as Brain Partners offers now, but the advantage is that Vitae can invest in a project or several projects with a developer, and we can help them go get the rest of the capital and debt, and we can do their accounting, and so we can kind of handle their back office as well. And that's, a little bit more like a full service approach, a little different than maybe what's out there. So
cool. One of the things that I remember about you is I believe you're a genius when it comes to spreadsheets, and you call it financial modeling, right? Can you talk about modeling? What is that, and how does that apply to like the biggest scope?
Yeah. Well, there's definitely financial modeling would be used to make investment decisions, and generally we're doing it whenever we have a project that we think is an opportunity, and we will plug in all the information about the project. That's the project costs. It's the land. If it's for rent, it'll be the rents and the vacancy factor that we think is going to happen. Or if it's for sale, it would be the expected sales prices for whatever we're selling. And then we apply what we have to pay a lender and other investors. And then, what comes out of that is basically, is the project more valuable than what it costs? And if it is, then how much more valuable? And then depending upon all that, and there's some other things that we look at for risk, but then that tells us how to structure the deal with whoever we're dealing with. And then we give them a term sheet, and that spells out how we would like to work with them. And then we go to closing. So we form an agreement and a company, and then we go to closing. So
with respect to the spreadsheet, some of the things that I remember seeing were, I don't know. I think it's incredible when I see that amount of granularity in a spreadsheet determining. I think one of the things I saw was like when you're trying to analyze whether one room size is beneficial in a high rise, or like a size of a bathroom. Maybe we should change the square footage. Yeah. So, and that's, I think that's pretty incredible.
Yeah. The comparing, if you're trying to figure out what to build, we'll look at other projects that have recently come online or even older product. And then, we'll see how big their rooms are, for example, like you said. Mm-hmm. And, if we want to do something different than what's in the market, because we think there's demand for that, maybe there's different features in ours than in someone else's. But you have to know that that's going to be in demand. So if you build a 4,000 square foot apartment, it's going to be a lot of space. You got to charge the rent. And can you get the rent? You're not going to be able to get in Haltom City, what you could get in South Lake, but, for example, so we look at other projects, and that's maybe less financial modeling, but certainly something we compare and we throw into the analysis for sure.
That's really cool.
Yeah.
How do you handle marketing when it comes to investments? From my understanding, there are hurdles you have to jump over with respect to public and private. Right.
Yes. Several. Yeah. It's pretty frustrating. And, I'm not a big, I really don't like all the red tape around it. I don't think anybody does, but, you got to abide by it. And, we try to keep it really light. There's two types basically that pretty commonly used. And one is really public. You can just blast it out there. Your opportunity, you can blast that to oblivion. And then the other one, it can't be blasted publicly. It goes to a group of people that, you kind of have already. So it depends on, and there's some other conditions there that you have to kind of abide by depending on which way you go. So we try to market Vitae, or Brain Partners, or, in the new company, VCBP, so that people just know it's there and they know what we do. So we'll do site visits, and that shows people, what we do. Sometimes we'll sit in the office and talk a little bit. We haven't done that in a little while, but another thing we'll do is we'll put market information out there to, be a little more educational. But for Vitae anyways, it's a lot of interpersonal kind of stuff.
A lot of FaceTime.
Sandeep does that a lot. He's good at that, and I think it's an effective way to do the marketing for what we do.
What's headed for the future for Vitae?
Yeah, Vitae it's pretty exciting in 2026. We're going to probably be going out for our biggest fund, and the target on that might be $50 million, it might be 75. But we're pretty excited about that because we think that there's a real opportunity. We'd like to write bigger checks than what we have been doing. Historically, it's $1 million or less. We'd like to maybe do $3 to $5 million going forward for at least half of the fund or a little more than half of the fund. So fewer but higher quality projects on those ones. And then for the other ones, we're looking for real opportunity, and we'll structure the opportunity to reduce risk as much as we can. Because you're gonna do risk, right? You're gonna take risk if you want to invest, and you're gonna take even more risk if you want to invest in real estate and development, that is. And so you got to do it right. But that's kind of our maybe 2026 and 2027 is fund number 6 for residential. And then obviously VCBP, we're going to complete that merger hopefully this month, and then we'll be rocking and rolling. So
all right, we are at the end of our podcast. So wacky question. The name of the podcast is called Structural Integrity. In the Navy, that means the integrity of each compartment, right? You close a hatch, you close a door.
Yeah, right.
So if anything happens, you're not affecting the whole. It is, but not, it'll still float. So with that in respect, how does structural integrity, the term, apply to you and what you do?
Yeah, right. Yeah, well, I would say that in the deals business, we definitely want to lock down one thing at a time. And that could be related to part of the due diligence process, right? You don't move on from the first part of due diligence until it's done, because then you might overlook something.
Right.
So I can see why that would apply. Probably also just in business in general.
Sure.
You do need to compartmentalize certain things. You need to compartmentalize accounting. It's also a VCBP thing. You don't want to have a lot of people involved in that. And you want to have it controlled from one side, and you close the books every month. Structural integrity of every month is intact, and then you move on to the next, and et cetera. So that's probably how I would apply that.
That's great. That's great. Awesome. Well, thanks a lot for being here.
You bet.